Thanks a lot for that. We'll, carry forward this discussion with Alok Misra, and you can join in on that one as well. He is the CEO and director at Microfinance Industry Network itself. Thanks a lot, Mr. Misra, for joining in. Of these additional measures that you've announced, could you tell us currently what proportion of borrowers have for lenders, what proportion of borrowers have their indebtedness above 2 lakh rupees? And what proportion of borrowers have more than 60 days, per day, 60 days overdue indebtedness?
Yeah. So good afternoon, and thank you for having me here. So number one, the first data point is ready in my head, so I can answer that. So number of customers as per the credit bureau data, those who have more than 3, or that is 4 or more lenders, is roughly around 5.9%. You can round it off to 6%. Now, number of clients having loans above 2 lakhs, all microfinance loans put together, is also marginal into the similar range. Now, when you talk about portfolio at risk more than 60 days default, that is, we typically will take 60 to 180. That would be somewhere in the range of 3 to 3.5%.
Mr. Misra, Abhishek here. Will the reduction in loan growth not impact the borrowers, because their flow will get impacted and it will be tough for them with respect to repaying their debts as well? And another one, if there is a cap with respect to lending from the organized segment, will they return to unorganized segment?
Well, very good question, Abhishek. So two things. Let me put things in perspective and allow me some time. Number one, when we are talking about not lending beyond 2 lakhs and not more than 3 microfinance lenders, we are talking basically about somewhere around 5 to 5.5% clients. And there also, we are not saying not lend. We are saying if the borrower has 4 relationships, for an example, if the borrower reduces 1 relationship and comes to 3 lenders, average ticket size in microfinance today is somewhere around 50,000. Around 1,50,000 loan from 3 lenders, or 1,75,000 loans he is still able to get. So that's not much of a liquidity constraint. Only it is returning back to a little bit of higher credit discipline. And second part of your question is more interesting, that will they seek more informal sector loans? So, well, hypothetically, yes, but practically, no. Why practically no? Because when we go to the field and when we talk to the borrowers, after 15, 20 years, that is what microfinance has done in India, having touching 8 crore low-income clients, and if we take their household members, it goes to almost 35, 40 crores. It has demonstrated to them that formalized, legalized, regulated services at doorstep can be delivered with proper respect and proper client protection measures. And I don't think for reducing one lender relationship, they will go back to the informal finance. That is not our intention also. And practically, the gains which they have seen being associated with microfinance will make them come back to the sector by reducing their maybe exposure a bit. But I think they will not go back to the informal sector.
Well, how will you make sure that, the guidelines are followed by lenders with respecting, the cap or the, amount to be followed? Because at current levels, even with income of rupees 14, 15,000 per customer, the end use is not monitored. And I hear from lenders that, the money is being used to buy iPhone 16 Pro Max as well as other vehicles, which is not in productive cases, right? So the end use is actually a consumption loan, and it's not been used to reproduce or be able to guarantee a repayment to lenders?
Well, Abhishek, if you must have been tracking the sector for quite some time, and there is an old practice and a term which we use in the sector, which we call as LUC, loan utilization check. Generally, after 30 to 40 days after the loan is disbursed, the field officer is supposed to check that the loan is being used for the purpose for which it has been taken. And there can be some weakening in some cases. Plus, also, the LUC might not be, I cannot say that it is 100% foolproof. Even then, there can be some commingling of funds for other purposes. But let me assure you, by and large, these funds are used to invest in their livelihood businesses. But in case of emergency, if somebody has used 10,000 of rupees to pay for some medical emergency, I cannot completely rule that out. Maybe we are trying to strengthen the practice of LUC more. That is one. And the second part of your question, I think you asked about, I think I am missing that question. Other than the LUC, the loan utilization check, you said for consumption, and there was a second question also from the side.
No, how will you ensure or try to
Okay,
ensure
yeah, sure. No, that's a very
productive use of the loans?
Yeah,
Sorry.
productive. See, there are two parts to it. Now I get it. You said one is productive use. That is for the institutions to do a loan utilization check and ensure that it is used for the purpose for which the loan is given. And the second question which you asked in the start was relating to how will this adherence be ensured. So let me tell you that we don't, the sector body and SRO, we don't believe in just merely issuing guidelines and leaving it there. So we have various checks. We do data checks from credit information companies on disbursement. We do third-party evaluations of the member institutions. And all these things are captured that are you adhering to the guardrails which have been prescribed or not. And let me tell you that in July we had issued one set of guardrails and the adherence has been quite positive from the sector. That is what our checks reveal. And these are data checks, empirical data checks.
So then, Mr. Misra, the guardrails that you have put in place, do you think that it will ensure that the second half sees some improvement in the sector in general? Because the second quarter itself was a very painful one for a lot of these microfinance companies. What is the sense that you're picking up on the ground now that we are done with the better part of the third quarter? And do you see it improving going forward as we end FY25?
Yeah. Anecdote. Data, the final data which comes in from the Bureau is still to come in. I have only data till September. But what I speak to the lenders who are in the field and they get field reports, they say that November is better and there is some signs of stabilization. And what we read in the newspapers today that the Kharif output has been a bumper Kharif output. The Rabi sowing has also started in full swing. And we hope that with this normalization and a kickstart in the rural economy, things should stabilize by January.
All right, things should stabilize by January. Two-part question then, Mr. Misra. The first one, of course, is that you've given us data. You've said that, 3.5% of the MFI loans are more than 60 days overdue. So the overall extent of the problem should not be more than 3.5% as of the data that you have right now. I just wanted to understand from individual players, who would be the ones who would be most vulnerable to this, where their exposure is more than the industry-wide 3.5%, because I'm sure some would be above this 3.5% mean and some would be below that. So I would like you to call out some specific companies out here. And the second major worry is that while you're saying that things will improve from January, the street is worried about, is it too little too late?
Well, I would only say that some of the persons who follow the sector say it is too much too early. So and somebody is saying too little too late. So we have to strike a balance that we don't pull the strings too hard and at the same time ensure that the discipline returns back. Now, when you quoted me as 3.5%, I just gave a rough figure. That is between overdue between 60 to 180 days. It may be plus or minus 0.5%. I don't have the ready data with me. I could have given it to you. Second part is when you say that there can be ranges. Some institutions might be higher, some might be lower. So that is for individual institutions to tackle. But for us as a sector body, we don't see any such major deviation which is a cause of concern. Individual institutions are taking steps. And as we discussed with these new measures and as well as tighter underwriting norms, and generally, when we issue these guidelines, the focus shifts to lenders and all these things. But the other things which have been done along with that, that also needs to be taken into account because the identification of client is a primary issue where overlending can happen. So that's why, because Aadhaar can't be used by the industry or the CIC, we have said that the voter ID, which remains as the primary ID for fetching the records, should be validated from the EPIC that is the Election Commission data source.
Right.
And secondary, the sector has also decided to take on a mission mode, the seeding of PAN numbers with the client profiles. And today's newspaper said that now the government has also refined changes in the PAN number,
Right.
wherein QR code and more authentic it will be. So with voter ID identified and that, we are also tackling other measures of the piece so that the sand doesn't keep moving and we are able to identify the client properly and dedupe it properly.
All right, Mr. Misra, thank you so much for sparing time and joining us to take us through your views on the sector and the road ahead as well. That was Alok Misra joining us on the show. Time for a short break. On the other side, Sudarshan will be here to talk about the Vahan registration data and whether there has been a slowdown in auto retail sales. Stay tuned, we'll be right back.